Happy Monday, everybody. Today is May 4th, 2026, and this is your Monday market update. And of course, may the 4th be with you. Let's recap last week's market and preview the week ahead. Well, we started the week on Monday with markets continuing their strong momentum, even as geopolitical tensions lingered in the background. The S&P 500 and NASDAQ both pushed to fresh record highs, extending what's been a remarkable stretch of strength in equities. However, the gains were far from easy. Investors had to navigate stalled U.S.-Iran peace talks and a fresh escalation in tensions around the Strait of Hormuz, which pushed oil prices higher and kept uncertainty elevated. Despite those headlines, markets showed resilience. This continues to be a pattern, markets acknowledging geopolitical risk, but not letting them derail the broader trend. Oil prices moved higher in the day, reinforcing concerns about inflation, yet equities largely looked through it. Technology leadership remained intact, with continued confidence in AI-driven growth and earnings supporting sentiment. At the same time, there were signs of rotation under the surface, with some profit-taking emerging in extended areas of the market. Still, the overall tone was constructive, and importantly, both the S&P 500 and NASDAQ finished at record closing highs once again. The Dow lagged slightly, weighed down by more traditional sectors, but even there, the declines were modest. The Dow was down 0.25%, S&P up just a fraction, and the NASDAQ was up about 0.25%. Tuesday brought a noticeable shift in tone as markets took a step back after those record highs. The pullback wasn't dramatic, but it was broad enough to signal some caution setting in. Key driver was weakness in technology and semiconductor stocks, which had been leading the market higher. Wall Street Journal report suggested that an open AI may be falling short of internal growth expectations. That raised fresh concerns about the pace and sustainability of AI-related spending. That sparked selling across the chip sector and weighed on the NASDAQ in particular. At the same time, oil prices continued to rise, adding another layer of pressure as investors began to think more seriously about inflation implications. Gas prices also pushed higher, reinforcing those concerns at the consumer level. The market also began positioning ahead of a heavy slate of earnings, particularly from the Magnificent Seven, with investors reluctant to add risk ahead of such a critical stretch. Interestingly, the Dow held up relatively better, helped by strength in defensive names like Coca-Cola, which rallied on strong earnings. This was a subtle but important shift, showing some rotation into more stable defensive sectors. Small caps, on the other hand, did pull back more sharply after a strong April run, highlighting how extended some areas of the market have become. Overall, the tone was one of healthy consolidation after a strong rally. The Dow was down just a fraction, the S&P 500 down about 0.5%, the NASDAQ was down close to 1%. By Wednesday, markets were dealing with a complex mix of macro and micro drivers. Oil prices surged again, driven by reports of an extended U.S. blockade of Iranian ports and continued tension in the region. That pushed energy prices sharply higher and reignited concerns about inflation, something the Federal Reserve directly addressed later in the day. The Fed had held rates steady as expected, but what stood out was the division within the committee, with multiple dissents, something we haven't seen in quite some time. That added a layer of uncertainty around the path forward for monetary policy. Fed Chair Powell acknowledged that high oil prices could push inflation higher in the near term, reinforcing the idea that rate cuts may not come as quickly as some had hoped. Meanwhile, markets were also focused on earnings, with several Magnificent Seven reporting after the close. Expectations were high, particularly around AI spending and forward guidance. The Dow continued its losing streak, marking its fifth straight down day, reflecting pressures in more traditional sectors. However, the S&P 500 and NASDAQ held relatively steady, showing that investors were still willing to stay invested ahead of those key earnings results. Bond yields moved higher following the Fed decision, adding another headwind for equities, yet the market held together relatively well. This was a day where cross currents were strong: geopolitics, Fed policy, earnings, and yet markets remained stable. The Dow was down about 0.5%, S&P down just a fraction, and the NASDAQ was up just a fraction. Thursday was a powerful reminder of how quickly sentiment can shift. After several days of uncertainty and pressure, markets surged higher on a broad-based rally. The catalyst was strong earnings, particularly from companies like Caterpillar and Alphabet, which helped to reinforce confidence in both the economy and corporate profitability. Caterpillar's results were especially important as the company is often seen as a bellwether for global economic activity. Its strong performance suggested that despite concerns, underlying economic demand remained solid. Alphabet also delivered a strong report, particularly around its cloud and AI businesses, which helped reignite enthusiasm in the tech sector. S&P 500 broke above 7,200 for the first time ever, a significant psychological milestone. Investors also grew more comfortable with the geopolitical backdrop as fears of escalation in the Middle East eased slightly. Interestingly, while some tech names like Meta and Microsoft faced pressure due to concerns about rising capital expenditures, the broader market looked past those issues and focused on the positives. April overall shaped up to be one of the strongest months in the year, in years, with major indices posting double-digit gains. This rally was broad, with participation across multiple sectors, and it helped to reset the tone heading into the end of the week. The Dow led the way with a strong move higher up by about 1.5%, the S&P 500 up about 1%, and the NASDAQ up close to 1%. Then on Friday, markets closed out the week and started a new month on a strong and confident note. The S&P 500 and NASDAQ both reached fresh all-time highs once again, capping off a remarkable period of performance. The primary driver was strong earnings, particularly from Apple, which rose sharply after delivering better than expected results and a solid outlook. That helped lift the broader market, especially the technology sector. At the same time, oil prices pulled back, providing some relief after a week of steady increases. That easing in energy prices helped calm inflation concerns, at least temporarily. There were still geopolitical headlines, including ongoing negotiations between the U.S. and Iran, but markets seemed increasingly comfortable that a worst-case scenario might be avoided. Investors also showed continued confidence in the long-term outlook for equities, with strong earnings growth and productivity gains, particularly tied to AI, supporting that bullish narrative. Even with some volatility beneath the surface, the broader trend remains firmly intact. The Dow was the only major index to finish lower on the day, reflecting some rotation, while the S&P and NASDAQ led the way higher. The Dow ended down about 0.25%, S&P up just under 0.5%, and the NASDAQ was up close to 1%. Now let's step back a little bit to wrap up the week. Despite a steady drumbeat of geopolitical uncertainty, rising oil prices, and ongoing questions around inflation and Fed policy, markets pushed higher for a fifth consecutive week. The S&P 500 finished the week up just under 1%, Dow was up roughly 0.75%, the NASDAQ was up a bit over 1%. This capped off a very powerful April, with the S&P 500 up about 10% for the month, the NASDAQ up more than 15%, one of the strongest monthly performances we've seen in years. What stands out is the market's ability to absorb negative headlines while continuing to move higher. Investors consistently choose to focus on strong earnings, resilient economic data, and long-term growth strategy, particularly around AI and productivity. Late week strength combined with the easing oil prices helped to reinforce confidence and push markets back towards highs. And that leads into an important point. While headlines remain dominated by geopolitics, especially the Strait of Hormuz, the reality is that earnings are currently the more important driver for the markets. This is one of the most critical weeks of the entire earnings season, with over 10% of the S&P 500 reporting, and strong results are acting as a key support for equities. Earnings may not be the reason stocks rally to these levels, but they are absolutely the reason stocks are holding these gains. With a ceasefire largely priced in, upside from geopolitical improvement seems limited, while downside risk remains if earnings disappoint. That makes this stretch especially important. Now let's look ahead to this week. From an earnings standpoint, the focus shifts meaningfully towards the consumer. We have a full slate of notable reports that will give us insight into spending trends and the economic health. Today, we had Palantir reporting after the close. Tomorrow, AMD reports after the close. Wednesday, Marriott, Disney, restaurant brands report. Thursday, we've got Airbnb and McDonald's. Friday, we've got Wendy's. In addition to those, there are also important reads on consumer behavior coming through: travel, dining, and services companies, areas that tend to be early indicators of changes in spending habits. Now let's turn to the eco data real quick, because this is a very full week with that. Today we got factory orders, durable goods, capital goods. Tomorrow we'll get trade balance, ISM services, S&P Global Services PMI, new home sales, JOLTS. Wednesday we'll get that ADP employment number, mortgage applications. Thursday, productivity, unit labor costs, jobless claims, construction spending, inflation expectations. And Friday, the all-important non-farm payrolls, unemployment rate, wage growth, labor force participation, and of course, consumer sentiment. And speaking of the Fed, we also have a heavy lineup of Fed heads this week. Today we'll hear from New York Fed President Williams. Tomorrow, Vice Chair Bowman and Governor Barr. Wednesday, we'll get St. Louis Fed President Musalem and Chicago Fed President Goolsbee. Thursday, we'll get Minneapolis Fed President Kashkari, Cleveland Fed President Hammock, and again, New York Fed President Williams. Friday, we'll get Governor Cook, Governors Waller and Bowman, and then San Francisco President Daly. And then, of course, we'll hear from Chicago Fed President Goolsbee just one more time. Now, that's a full slate, and it matters because markets will be listening closely for any shift in tone around inflation, labor markets, and the path of interest rates. So when you step back, here's the setup. Markets are strong. They're near all-time highs. But this week is about confirmation. Confirmation from earnings, especially from consumer-facing companies, confirmation from eco data, particularly from the labor market, and confirmation from the Fed through both data and commentary. If those three line up, markets can continue to hold these levels. If not, we may start to see some volatility re-enter into the picture. As always, stay focused on your plan, not the noise. Let's have a great week ahead.